But the problem is, a lot of these banks didn't do their due diligence. They didn't do their due diligence at all. So you basically have a situation where a lot of the people who have mortgages shouldn't have them. Canadian banks are in trouble and things are getting really bad for them. You know, it's not just the residential mortgage market that is looking bad for these banks. You've only got to look at credit card debt, auto loan debt, commercial real estate, and the many other things that are going wrong right now in the economy. You see, what is happening right now is we had the apex of this mega bubble that has been formed, not just in Canada, but in other countries too. But really, you have to look at the amount of debt relative to income to gain an understanding of how big this got. And Canada is the biggest bubble in the world when it comes to household debt to income. So it's kind of crazy where Canada is at right now, and the banks are holding most of that risk. If a person goes into foreclosure, who loses the most money? It's going to be the bank, especially when you've got lots of homes that are coming onto the market, and essentially those homes are being fire saled at ridiculously low prices. And you know, I've seen the foreclosures here before in Alberta, and they were particularly lower priced than any other of the houses on the market. So if you had houses in a subdivision going for around 700,000, the foreclosure would come on at 600,000, a massive discount, because the bank, they just want to sell it. So they're prepared to sell it for less because they just want to offload it off their books as soon as possible. So the banks are holding a lot of this mortgage risk on their balance sheet. A lot of these mortgages that have been took out over the past couple of years have been fraudulent. A lot of the people who've took them out just cannot afford to pay them back. So you're in this situation now where the banks are holding a ton of risk, and you and I can see that, but the stock market cannot see that. I mean, they are always last to accept and realize what is going on. So the banks, some of the banks are slowing lending. You've got BMO that is pulling out of the auto sector. They're not going to be lending anymore for cars. And then you've got Scotiabank that is actively slowing their mortgage business right now. They're giving all kinds of excuses, but the net result is credit tightening. So we're actually seeing the credit crunch start right now. Little do people understand or realize. And like I said, guys, if you want a housing market crash, you need credit tightening and you need high unemployment. And we're starting to see that credit tightening happen, something that hasn't happened in Canada since the 1990s. In 2008 in Canada, credit tightening not only didn't happen, it went the complete other way. Actually, banks were more willing to lend than they were before the crisis. So essentially you had an explosion in most major cities across Canada in terms of real estate prices because people were able to get these loans. And essentially when banks are more willing to lend for things like real estate, that pushes up the price. Obviously, whenever you've got artificial demand that is coming, and it's coming from either the banks are more willing to lend or it's coming from entities like CMHC. So let's talk about CMHC, because they have had a massive role in this subprime mortgage crisis that Canada is looking at facing right now. So the thing is, subprime really is anybody who's putting less than 20% down. Now the thing is, CMHC has really been abused by a lot of people, and it's meant that a lot of landlords have just said that it's their primary residence in order to get CMHC mortgage insurance, which essentially means that they can put less money down. So the thing is, the CMHC has created massive moral hazard in the banks as well, because the banks, they think that they don't have a lot of the risk. I mean, the thing is with mortgage insurance, it's insurance at the end of the day. So the bank has to put a claim in. It doesn't just pay out, has to put in the supporting documentation when somebody starts defaulting on their loan. Obviously, the CMHC wants to do their due diligence to make sure that the bank did their due diligence when they signed the loan. But the problem is, a lot of these banks didn't do their due diligence. They didn't do their due diligence at all. So you basically have a situation where a lot of the people who have mortgages shouldn't have them. You only have to think think of things like this, for example. Essentially, when a mortgage renews in Canada, what has been the case for the past couple of years is it just renews. They don't even do a credit check, which is just absolutely crazy. You cannot believe that this sort of thing happens in Canada, but it happens all the time. Now, obviously, they're meant to be doing credit checks. They're meant to be checking the borrower is actually worthy of still paying back that mortgage, but they don't. There's a lot of assumptions that are made in the Canadian housing market. And you know, for a long time, borrowers have thought that has actually aided their ability to pay back these loans. Because think about it, if you're a borrower and the bank is not going to check your credit when you renew, well, that's great, because you're now going to be able to pay your mortgage. You're not going to lose your house, even if your credit score has dropped massively. But the problem is, the credit score, if it's dropped massively, the probability of you defaulting on that loan has gone up. So what's happened over time is the amount of people who are essentially not worthy of paying back their loan has gone up and up and up over time. You only have to look at the rental market for example of this. So here in Calgary, we were just actively in the rental market, so I can really tell you about what it's like. And I can tell you that if you have good credit and you're a good tenant, you are in short supply right now, even in a rental market which has unbelievable amounts of demand. You know, you hear these things all the time on social media and in the mainstream media, and I don't think that's wrong. There is a ton of demand in the rental market, but when you get talking to different landlords, you start to realize that there is a total lack of people with good credit. And it's not just going to be the case for the rental market, guys. You've got to think, if it's the case in the rental market, that's going to be the case in the housing market too. You've got a lot of people who deferred their mortgages. I mean, remember when so many Canadians were deferring their mortgage? Well, essentially, did that affect their credit? No, it didn't. Is negative amortization affecting their credit? No, it isn't. But the fact is, as a borrower, their ability to pay back the loan is looking less and less likely as these things happen. So it's going to be very interesting to see what happens moving forward. You have a lot of risk that has been offloaded to the taxpayers by the bank in their view, but I think that the CMHC will actually not pay out on a lot of these loans when it really comes down to it, and that will completely reset the mortgage game here in Canada. And this is something that people just aren't thinking about. So essentially what I'm saying is, when the CMHC stops paying for those mortgages, or they start to question whether the banks have done their due diligence, that's it. Credit tightening and the credit crunch will be here from then on. The CMHC mortgage, even if it continues, will never be seen by the banks in the same light, because the banks, they just think that the CMHC is going to pay out because it's the government for all these loans. You and I know that there would be massive public uproar if that actually happened. So the thing is, it's more likely that the CMHC is not going to pay out on all these loans and is going to question it. After all, it hasn't got the amount of money that would be needed, hundreds and hundreds of billions anyway, so it can't pay out on potentially all these loans that are in negative amortization and all these fraudulent loans, these subprime loans, all these loans essentially where the risk is just not priced correctly. I mean, think about it. If people are committing fraud, even if it seems like a little thing, like just saying, oh, I live there, when you don't, you rent it out, obviously the risk on that mortgage is then completely priced differently. And a lot of the times the banks aren't even doing simple checks, going to the credit bureau and saying, does this person actually live there, when they come to renew their mortgage? Because like I said, they don't do these checks. So obviously there's going to be massive amounts of problems when it comes down to it, because it's going to be seen that the banks didn't do their due diligence. And then the fact is, when the banks are dealing with lots and lots of losses, well, guess what's going to happen? You're going to have the banks that don't want to lend, particularly for residential real estate, because that's what they've got burnt on. And even if the CMHC mortgage continues, like I said, the banks will never price that risk again. You will never see mortgage lending what it was like prior to 2023. I think mortgage lending in Canada is changing for the foreseeable future, and this will really start the capitulation in the housing market, as credit crunches do, because I've seen a credit crunch. I've been through a credit crunch firsthand in the UK, and things get really ugly in those those types of situations. So anyway, I want to thank you so much for watching. If you're looking for a VPN, go to expressvpn.com/marketmania. If you want to support this channel and get access to videos early, go to patreon.com/marketmania. Thank you so much for watching and being a loyal supporter of this channel. I will see you in the next video. If you've enjoyed this video, you might like this video here, you might like this playlist here. I will see you in the next one. Take care.